Welcome to Rich Keys channel, where we unlock wealth one candle at a time. Here, charts don't lie and neither do we.
Disclaimer, not financial advice. The information provided on this channel is for informational and demonstration purposes only and should not be considered as personalized financial, investment, or trading advice.
Welcome back, traders. Today is Sunday, 27th of July at about 5:40 a.m. and I'm presenting my weekend analysis to record my thoughts and also to share my analysis with the trading community. Today I'm analyzing the S&P 500 index fund. And again, since it's almost the end of the month, I like to take a picture of the monthly time frame. Kind of remind myself how the monthly is looking because, when you zoom out, you see things quite differently from the lower time frame with a lot of volatility. All right, so on the monthly time frame, we have actually pushed up from a reversal candle that occurred in April. And it's been 3 months straight up, bullish candles so far. The good news is this is still bullish. We haven't had any reversal candles from the monthly to the weekly to the daily. We have no rejection candles so far that suggest that the move up is now. Whilst we have from the monthly to the daily in perspective, I want to emphasize that we've closed outside the KC channel. This blue line here is my KC channel here, and that's the riverbank. That's the Bollinger Bank. So we've closed outside 3 weeks, at least so far 3 days. Okay, so we have this closing, and now this closing. If you look at the pattern on the S&P 500, anytime we close outside the KC band, we seem to at least go or hold outside the band for about 2 to 3 days. So here was one where we closed outside, and for 1, 2, 3, 4 days, we stayed outside the Bollinger Band before we had our correction back to the moving average. A similar pattern also occurred here. Once we hit outside the KC band, we stayed out 1, 2, 3, 4, about 5 days outside the band before we had our correction. Okay, so based on this pattern of KC channel and price action on the S&P 500, I'm expecting maybe one or two more bullish candles on the daily chart, and also to hit potential target wise is 64.17. Now this 64.17 is a fib extension level of the 618 zone. That's a golden Fibonacci extension level. And I measured this from the 2022 base. If you go on the monthly time frame, see if I can zoom it all out for you to see how I come up with these target. Hopefully somebody will learn out of it. So in 2022, right here, right about here, is where we formed this base. So we came to this 50-period moving average on the monthly chart, and this is where the rally began. Okay, so we had this strong rally from 2022, September, October, thereabout, and this rally has still been in place until we had a major correction on April. And interestingly, this correction came right to the support of 2022 high. It's interesting when you look at the chart from the monthly perspective. And found support right there, and off we go. So definitely this support pushing us to a new all-time high is a strong new wave, if I may count it. And I expect S&P 500, after some correction, to probably continue to complete this wave into quite a bullish target that we'll figure out as time goes by. So in brief, my analysis for the S&P is bullish. We're probably going to have at least 2 or 3 candles outside this KC band. My potential initial target is this 64.17. It's a fib extension, and should we break, we probably may hit the wall of the 707. I don't expect us to go above this 707, as I was showing you on the monthly chart. If you look at the monthly RSI, we kind of have some divergences in place. And as I've always enumerated on this S&P chart, the problem had always been this volume. Even if the volume was steady, if you look at it from 2022, okay, volume wasn't rising, but it was steady. Volume was just steady. And then, of course, when we hit into a higher gear, you could see volumes were really rising right up here. Okay, a little selling here, volume was still pretty steady and healthy. But when you're looking at here is after our reversal, okay, strong, good volume. Yes, it's a red volume because price came all the way down, but it was absorbed all the way back up. And if you look at this volume is declining and declining. And I've always been paying attention to this volume as a caution. Don't take it with full conviction, as volume is not supporting the rally as we've been going up. The other thing I'm also watching is my RSI. So RSI seems to be forming a divergence. Should we close where we are on the monthly at, let's say, the fib extension of 618 or even the 707? And if RSI is not able to reclaim somewhere here, okay, because this is a previous high RSI, and we form our RSI here. This right here will give me a divergence. Between here and here will give me a monthly divergence. And should we get this monthly divergence to play out, I'll probably be expecting a good correction on the SPX. But that hasn't occurred yet, so no need to worry about that. We trade what is current. We trade what is before us, not what we think could happen. My cycle hasn't also even turned down. Although yes, cycle is at the place where it usually turns down. If you look at it from the monthly, every time stochastic cycle gets somewhere here, it turns. Anytime it gets to about this 94 zone, it turns. So we are not too far from a turning zone, right? So this is time that I personally would not be putting on a whole lot of trade, and I would advise that you do likewise. Because once we hit this level, chances are that we may cruise slightly about this level, probably inching up to the targets as I was showing you. But it's more likely going to have a reversal from here. And if you step down to the 4 hours, which is a good time frame to look at it for short-term view, let me try and zoom out. I wish this thing wasn't always doing this, but okay. Yeah, so from the 4 hour time frame, yeah, we're looking to hit this 2022 base extension. That's my target for SPX, and I think that'll probably be my best target, because again, there's also divergences showing up on here. Okay, we've hit a higher high from this high, and RSI is somewhere here. At the end of the day, RSI is still in the, people will call it overbought zone. And anytime you get in this zone, you could probably expect a correction sooner or later. So that's my analysis on S&P 500 for this weekend. I wish everyone a profitable trade. Cheers.